Welcome to the Grow with Purpose podcast. This is the Axiom podcast where we talk about what Axiom advisors do out in the field with business owners every day to grow their businesses with purpose. We also get to talk to business owners themselves about their business, their story, what's working, what's not working in the business. And I think the feedback I get is that those are some of the favorite episodes because the people who listen to the podcast for the large part are business owners and leaders. And it's nice to know that you're not alone. And today we have one of those in the studio virtually with us, JoAnna Kelso. And JoAnna is the president of Axis Outsourced Accounting. And this is the third in a three-part series where we've been talking about clean financials, the concept of outsourced accounting. And today we're just going to be talking about the insights you get and you should expect, frankly, from an expert. So thank you, JoAnna, for coming back for the third episode of this series, and excited to talk to you.
Well, thank you for having me back again. I've really enjoyed the first two conversations we've already had. Looking forward to this one as well.
So we've talked about clean financials and the value of clean financials and the struggles that business owners have, and you spoke very specifically to the frustrations that they experience when they're not getting, and you put it very succinctly. Consistency is key. Consistency and accuracy. Those are two things. And then in the last episode, we talked about what it means to really outsource and the value you should expect from outsourcing and how that looks different from maybe hiring a freelancer and even insourcing that. And for some businesses, insourcing it, building out a fully fledged accounting department that can do all the things that are going to add value to the business. Financially, that's just out of reach and not needed. That's not, they don't have the need for a full-time expert in accounts receivable, full-time expert in AP, full-time controller. But outsourcing provides access to that level of skill and quality. But today I want to talk about, and maybe to paint the picture, conversations that you have with business owners. On that monthly, they're getting weekly updates. They have a very clear picture of what their weekly receivables and payables are. They can print financial statements every week if they want to. But they're also, when that month-end close happens and you and your team go through all of the formality to make sure that everything's buttoned up and reconciled, and there's certain journal entries and adjustments that only happen on a monthly basis, that's all done. And they get some face time with you or a member of your team. That's kind of the picture that I want to paint. And you've had lots of experience in this. What does that conversation look like? Give us some insight into the things that you talk to business owners about, what their concerns are, ways that you and your team are adding value during those types of conversations.
Absolutely. Well, with any financial discussion, you're going to start with the profit and loss. That's the lifeblood of a financial discussion because a business owner has to know, did my company make the money that I thought that it made? But that's just scratching the surface of what this conversation should be and what it is with Axis Outsourced Accounting. We're going to talk about also your balance sheet. A lot of business owners don't even look at it. It's a scary topic for some business owners. They don't realize that looking at that balance sheet could alleviate costly errors, that their business may be undervalued. They may have a stronger financial position than what they even thought that they did because their balance sheet has not been touched or correctly journaled into. So we're going to look at not only your profit and loss in your balance sheet, but we're also going to take into the discussion things like, this is the trend that we're seeing. You're spending more on marketing every single month, but your revenue has yet to catch up to that increase in spend. Are you expecting that revenue to come in? What is the typical turnaround that you're going to see from this uptick in spending? And it could be that the business owner started something new with a new marketing company, but forgot to cancel the other guys. And the uptick is just because they didn't realize they were still spending money on it. So those kinds of questions are going to come out during that financial discussion. And then our relationship is going to grow and grow each month to where I'm not even going to wait till that financial discussion. I'm going to say, hey, I see that you also spent some more money on marketing. Did you forget again to cancel your other guy? I'm going to know that. And so those kinds of questions are going to come out, and we're we're going to start having that kind of relationship built up to where you can call me and say, hey, I'm about to do this. What do you think? How should I do it? And I'm going to call you and say, I'm seeing this come through your bank right now. Were you expecting that? So the financial discussion that happens once a month is going to build the relationship that's going to happen all throughout the month.
You talked about the balance sheet, and I'll tell a quick story. I'm in a CEO roundtable group called C12. It's a group of Christian business owners. We get together every month. They're all over the country. I'm a huge, huge fan. My wife is an even huger fan because it's made me better in a lot of ways. But we were talking about we'll have every month we'll have a different kind of business segment, and it could be marketing, it could be sales. This particular month we were talking about financials and financial statements. And as we were talking, I've got those magical 3 letters behind my name, CPA, which means like it's kind of like having a pastor in the room. Anything, something biblical comes up, everybody looks at the pastor. I know they get tired of that. So they were like, okay, well, explain this balance sheet stuff to me. And so I was, just kind of going through and I think you do this very well as well, layman's description of what it is. So, assets are the things that you own. Liabilities are the things that you owe. What's left over is what you're worth on paper, right? And that's hopefully that's lower than what you're really worth, because what you're really worth is the ongoing cash flow in the business. But when you look at the balance sheet, just think of it like I own my cash, I own my receivables, I own my inventory, I own my trucks. When you get to liabilities, I owe my vendors, that's accounts payable. I owe my bank, that's my long-term liabilities. I owe my employees, that's my payroll liabilities, or the state taxing authorities. And then my equity, my retained earnings, my additional paid in capital, my that negative amount that's taking away from that for distributions, that's what's left over. And I just saw these light bulbs go off, and the person leading the meeting, our facilitator, he saw the light bulbs go off too, and he said, hey, I've got a group next week. Would you come in and do the same thing with that group?
Awesome.
Well, I tend to over prepare for everything. And I also knew this group, and just to make a longer story long, they were the very first C12 group that ever started. And it started right here in our backyard in Southwest Florida. And the guys who are in this group are like, they're business and spiritual and just character giants to me. These guys are, several of them are mentors of mine. And so I'm like super intimidated. So, I like over prepared. I prepare like this now I've got a slide deck. I'm not just speaking extemporaneously, like I got a whole presentation. But I started and I said, how many of you, there's 12 guys in the room, and these are like $50 million, $100 million, $5 million companies. These are pretty big companies. I said, how many of you understand your income statement? Every hand went up. I said, how many of you understand your balance sheet? One hand went up. And I was flabbergasted. I thought I was going to be speaking to 50% of the group. And I had all these discussion questions prepared for the other 50% of the group. So you guys explain to these other guys what you find in the balance sheet, what where the insights are that you get. And, it was 2 emotions going through, like, okay, super excited because 11 of these 12 people are really going to be leaning into the discussion. The other emotion was terror because half of my presentation just went out the window because I had no discussion that was going to happen. But you make a great point. They don't understand it. I'll go out on a limb from working with lots of bookkeepers, and it's no fault of their own. Like, they manage payables, they manage receivables. And for them, that's a process. That's a step one step. I receive the invoice from the customer. I enter it into the system. I make sure that it's coded the correct way. I book the inventory if it was used to purchase inventory. I schedule the payment. I run the weekly payables report. I make sure those things go out on time. And they're really, really good at that. Or on the receivable side with invoicing and collections, they're really, really good at that. But they're not technically trained. They don't have any formal education. They don't have any experience being responsible for the entirety of the financial system. And they don't understand the balance sheet. So they're never going in offering to answer questions of the owner. And one of the challenges I have with every Axiom client And frankly, every Axiom advisor has to go through a pretty deep level of technical training from me on how
Hmm.
to read financial statements, because that's not how they were trained either. They're experts in sales, or they're experts in leadership development, or they're experts in employee benefits and training. We purposely try to diversify the skill set on the team so that a client who hires Axiom doesn't just get one advisor. They get a team that has a deep knowledge of experience across several areas. And so we have to train these guys on how to read financial statements. And then they have to go, their message to clients, to CEOs of companies is, if you don't understand what is behind every single number on the balance sheet, you need to sit
Hmm.
down with your CPA or your
Yeah.
accountant or your controller, and they have to explain it to you until you can understand it. And,
Right.
if you're talking about a home builder, and you're trying to explain to them what cost in excess of billings is, and
Hmm.
you try to explain it the way you learned it in advanced accounting,
Yeah.
506, and you think that's sufficient, we are not going to sit at the table with a controller or CFO who tries to do that. It's like, nope, you got
Right.
to go back, go chat GPT that and say, how would
Yeah.
I explain this to a high school sophomore? And then come
Yes.
back and let's try again with your owner. Because I'm getting stuck on this point, because what you said about the balance sheet, the analogy that I use a lot is, if we were to go out to the high school track and you said, I want to, I want to become more fit. And
Hmm.
I said, great, we're going to go to meet me at this high school track, and I want to time you and see how long it takes you to run a 400 meter or a 440 yard lap around the track. And let's say that we work on that and we get that time, I get a baseline, and now I know this is how fast you can run. And as we train, I expect this number to go down.
Hmm.
But then I send you to the doctor the next day and I say, I want you to go to a full physical, full blood work, CT scan, the whole bit. And it comes back, and if you find out that you have stage 3 prostate cancer,
Hmm.
you may have had a great time around the track, but you're unhealthy. And
Right.
the track is your income statement, but the balance sheet is your lab results.
That's
That's the
good.
picture of how healthy you are. And if
Yes.
you don't understand your balance sheet, you could be running around that track and have a heart attack, because you run out of
Yeah.
cash flow,
Yeah.
because you take on a job that's got huge margins,
Hmm.
and you run way over on your labor budget, and now
Yeah.
you're having a hard time making payroll because your
Yeah.
balance sheet didn't have the cash reserves for you to go out and sell a job that was that large, or you
Yeah.
didn't manage your billings correctly.
Yeah.
So I think your point on balance sheets is one that, if any business owner takes anything away from this, it's like, if you don't have that understanding, you need to find somebody, bring somebody in who can make
Hmm.
sure that you get at the baseline understanding, but that you're coming back to that. And to a point you made earlier, looking at trends, not just in your revenue and your marketing, but trends in your balance sheet health.
Right. That's a great analogy. I love that. On a granular level, I have actually sat down with business owners before who don't understand why, when they make $1,000 truck payment, that $1,000 doesn't decrease out of their profit at the end of the day. And those kinds of questions, we're going to explain it to you and you're going to understand. And it's not going to cause a $12,000 swing at the end of the year, because that gets corrected over to the balance sheet where it should have been, decreasing your liability versus decreasing your profit overall. So, when you don't understand the balance sheet and you don't understand that things aren't hitting it correctly, then you are going to find at the end of the year a massive swing in what you thought your business valuation was. Because really, like you said, the profit and loss is just it's the fun report that people want to look at when they're making money.
Right.
But
Yeah.
then that balance sheet is like so critical to understanding the actual health of the business. So I love that analogy.
Yeah. And we should talk too about, on the income statement, there's some things that
Mhm.
a lot of business owners don't understand. Two that jump to mind. Well, one is not there, but it comes from there. But the first one is something that has only got more, it's become a bigger deal in the last 20 years, definitely, but it's depreciation. So
Yeah.
you said you go out and you buy a truck. Well, the CPA who's preparing your tax return, he has one goal, and that is to get your tax bill as low as possible, as he should.
Sure.
That's their
Yeah.
job. But
Right.
you're going to go out and you're going to buy an $80,000 truck with a utility bed on it, fully kitted out, and might be more than that today.
Mhm.
But your CPA is going to look at that and go, hot diggity, I get $80,000 of bonus depreciation or
Yeah.
179 deduction. I can take an immediate tax write-off for that
Hmm.
vehicle.
Hmm.
And they should.
Yeah.
And what you come away with is $80,000 decrease in your net income. And you go, what the heck just happened? And your CPA goes, no, don't worry about it. Don't worry. That didn't cost you any cash.
Hmm.
We just were able to really lower your tax bill. I did a great job and pat myself on the back
Yeah.
right
I'm
now.
the hero.
Yeah,
Yeah.
you should be saying thank you right now because I'm
Yeah.
brilliant.
Yeah.
And the business owner goes, okay, well, I'll just have to keep that in mind going forward that I really didn't, have an $80,000 loss that I wasn't expecting. That was for
Hmm.
tax purposes. Well, now we've opened up a whole can of worms because if we're trying to compare next year to this year and we didn't
Yep.
buy another $80,000 truck, we think we did $80,000 better than we actually did because we
Yeah.
think we did $80,000 worse last year than we did. But
Hmm.
the other issue is you said that truck, let's say we financed that truck.
Hmm.
Well, now we've got $1,000 a month or more coming out of cash flow.
Hmm.
There's no indication that that cost us anything on the income statement. So for the
Exactly.
next 4 years, we have no idea of what it's going to take to replace that truck on a monthly basis when it breaks
Hmm.
down. Whereas if we would have been taking an alternative depreciation method, not, I
Yeah.
shouldn't say that's a technical term, but if we had been just like using a real life depreciation method and saying,
Right.
we think we're going to get 5 years of use out of this truck. So we're going to
Hmm.
take the $80,000 and we're going to divide it up over 60 months. And we're
Hmm.
going to put that on there. And if we can run the business and have that monthly depreciation expense, which is kind of close to the cost of cash flowing that truck,
Hmm.
if we financed it, and we know we can do okay with that monthly truck cost built in there, then when it comes time to replace that truck, no worries. But
Right.
if we haven't done that and our profit has kind of leaned out and it's like, oh, that truck's worn out, we got to go buy another one. Well, we're going to have a hard time cash flowing that sucker, right?
Yeah.
We already have been, but you just haven't been seeing it in the income statement. So we're getting kind of technical and in the weeds, but there's a lot of issues in the income statement too. The other's taxes. So I'll just
Yeah.
say, like, most of the businesses that are going to be out there, probably S corporations or partnerships, which means
Hmm.
they don't pay any tax. The
Right.
owners get a K-1, which is kind of like getting a W-2,
Right.
like a document from the business where the government says, hey, the business made this much money, you got to pay the tax on it. Well,
Right.
where does that money come from? It comes from the business, right?
Yeah.
So if you're not planning, like, you may look at the end of the year and you go, we made $500,000, that's fantastic. And the business owner thinks, great, there's a piece of property next door I want to expand into. I can take this to the bank and they're going to loan me the money and I can afford to make $300,000 of payments every year because I'm making 500,000. Well, Uncle Sam came along and asked for $175,000 of that money 4 months later, and you haven't baked that in. So,
Yeah.
having somebody in your corner who's thinking about the income statement and the balance sheet, not from, I got to get all the transactions in so that the bank
Hmm.
statement reconciles, but I have to get all the transactions in timely and accurately so that I can create a good picture of how this business is actually performing. And then I can
Right.
have conversations with the business owner about the track level, the track record of that performance and where it's trending so they know how to go make better decisions in the business.
Yeah. Well, and if those types of things are not taken into account, even at the end of the year, if the business is doing great and it is very healthy, the business owner may suffer tax wise. They may
Mhm.
suffer in their personal income because they're stuck with a huge tax bill that they were not expecting. And that's why you also have to really monitor the distributions you take from a business. And you have to balance that with a salary that you should be taking from your business. So that way your taxes are paid incrementally through the year. And at the end of the year, you're not all of a sudden, oh, I took $150,000 in distributions and I should have only taken 75,000 and taken 75,000 as a salary and had that, that
Yeah.
tax prepayment made for me, forced upon me by
Yeah.
taking a salary. So, those types of things are located on the balance sheet. And if you're not looking at that because it's a scary topic to you, then you're probably going to, at the end of the year, wish that you had.
Yeah. By the way, I'll just raise my hand, like guilty as charged, because in the early days of my business, I did exactly that. I
Yeah.
I was like, why worry about having to cut myself a paycheck and, add
Mhm.
myself to the payroll tax returns? I can just take the distributions. And man, that is a rude wake up call when you have
Yes.
paid no taxes on all the money you've taken out of the
Yeah.
business. And when
Yeah.
I started paying myself like a big boy, like a
Hmm.
real business,
Hmm.
it was so much nicer to have that tax bill due in April shrink
Yes.
significantly. And it really allowed the business to grow because we didn't have this huge cash hit. And, I
Yeah.
was like, I might not hire somebody because of like, oh, there's a big tax bill coming in April. I'm going to have to wait until I can recover some of that cash. So
Right.
there's, Dave Ramsey, I like, in all honesty, he can be a little bit hard for me to take. He's,
Yeah, me too.
but he's a bright guy. His
Yeah.
brilliance, though, is in understanding it's not about the math, it's about the behavior. So,
Yes.
like for me, you might say, well, at the end of the year, Joey, it's the same amount of tax whether they took it out of a little bit out of every paycheck or whether they took it at the end of the year. The difference is in the behavior. If they're taking it out a little bit at a time, I adjust my performance to compensate for that and make a little bit more money. And after we started that, I actually saw the business grow significantly because
Mhm.
I wasn't resting on my laurels of, well, cash flow is pretty good, and I'll worry about that tax bill later. And so it's one of those things. I think one of the things you bring to the table is this practical advice that really comes from wisdom of working with a lot of business owners and saying, this is probably a change that you need to make, and
Yes.
you're gonna be glad we made it later, and I'm going to try to make it as painless as possible to
Mhm.
implement so that you can really focus on growing the business and not worry about some of this accounting stuff.
Yeah. And speaking of behavior, I have found through the years, so maybe unpopular opinion, but business owners will much more likely swipe a business credit card than their personal debit card. And so, if you encourage them to take a salary and to actually spend money out of their personal bank account versus the business bank account, suddenly they're a little bit more thrifty.
Yeah, true. I'm guilty as charged on that one too. You're convicting me a lot in this podcast. Well, let's talk a little bit as we wrap up about the relationship between Axis and Axiom and
Yeah.
what that looks like when you're outsourcing your accounting to Axis.
There are several key differences between Access outsourced accounting and other outsourced accounting. I say that confidently because we are passionate about weekly financials and dashboards and getting information to business owners. But I think the highest level difference of us and them is the fact that there is a relationship with Axiom, a consultant that can help you grow your business that you otherwise would not even have that relationship with. I'm going to get you good numbers. I'm going to make sure that my team is working diligently for you all throughout the month. But there's going to be somebody that is set there for growth mindset that's going to help you stretch beyond just looking at these numbers. Hey, we survived the month. It's going to be how do we thrive in the future? And that's the key difference. I can't even tell you the value that that's going to add to a business who doesn't yet have a relationship with Axiom, but can start building that relationship. And then as soon as the business grows and they're at a level where they need a full-time relationship with Axiom, it's already built in and they already have got that relationship started. And that's a difference for small business owners that no other outsourced accounting service is ever going to be able to offer.
Yeah, and that was by design because when Cameron proposed this idea a year and a half ago, he said, I see a lot of businesses out there that aren't ready for Axiom yet, but they all have this fundamental need for more financial clarity in their business. And if we could find a way to deliver the financial clarity at the same time we were building the relationship with the owner and just talking about strategic topics with real data that we could base
Mhm.
that counsel and advice on, they would grow in no time to be clients that would be a great fit for Axiom. And the truth is, clients need to be of a certain size
Yes.
We typically say around $2 million and up, it starts to be a good opportunity for Axiom and a client business to work together. And it has less to do with the amount of revenue than it does the team that is generating that revenue. So when Axiom gets involved with the business, one of our charges is to create a leadership team in that business that's capable of running and growing the business without the business owner have to be constantly driving everything. We really want to shift a lot of the burden from the owner's shoulders over to a leadership team that owner's a part of, but frees the owner up to do, again, what we've said before, things that only that owner can do rather than carry the weight of everything. And so under $2 million, sometimes that team just isn't built out yet. But if they're under $1 million or between $1 million and $2 million, and we can get them some financial clarity, and we know what we measure and pay attention to improves, and you and your team are making sure they've got the accurate numbers, they're keeping the eye on the ball, they understand all of that, then we can expect some improvement because they all want to grow. But one of the things that we said is if we onboard an Axis client, we're going to assign an Axiom advisor to that client. And that advisor is going to get the behind the scenes intel from JoAnna and her team on what's going on in that business, and then meet with that business owner every month to talk about not the financials, because, there's going to be financial discussion, but JoAnna and her team have covered all of the important insights that need to be coming out of the financials. So now that box is checked, we can talk about the things that are going to drive those financial results, whether that's leadership team development or sales process improvement or pruning products that aren't profitable or pruning customers that aren't profitable. These are all more strategic topics that the guys and ladies have to get involved in at Axiom. The other thing I'll say is one of the things that we've recognized at Axiom is if we have a team at a client and there is a financial voice at the table that knows the numbers, we trust the numbers are coming out frequently enough that we can actually use them, which is a real problem in a lot of businesses. Like accurate numbers, great, but by the time we get them, there's nothing we can do. Now we need numbers today or last week, not 6 or 7 weeks ago. But if we have that on a team, it's just an incredible lever that we can use to grow the business, because we're interacting with the leadership team with accurate and timely data. They're trying things in the field. We've got an immediate feedback loop into how those things are actually working out. And because that person's at the table, as we're making decisions about things that might or might not be done, that person who has the financial insight is saying, well, I hear you, but we need to add a tracking number to that marketing campaign so my department can track the revenue that's coming from it, and I can tell you whether it's working or not. Or there needs to be an extra field when we do this with our software provider so we can put this piece of information in and I can know whether you're getting your money out of it or what we need to be doing to follow up with a customer, et cetera, et cetera. So that's where I see, we've talked before about there's some stuff happening behind the scenes at Axis that deliver a lot of value to the customer. This is one of them. That relationship that you have with each of our Axiom advisors and that your team has is one of those things that the information flow back and forth is going to feed the counsel that the Axiom advisor is giving that business owner that just turbocharges the progress they're going to be able to make. We would not offer to sit down with a business owner and just have a generic conversation about how to grow the business without this type of insight, because it would be pointless. But what you're doing with your team makes that conversation possible. It makes it possible, frankly, for Axiom to grow the number of businesses that it works with.
Yes, the meetings that you'll have will be much more productive with these business owners. But I think what's exciting for me is whether a client comes from Axiom over to Axis or from Axis over to Axiom, they're already going to understand that they can trust us, that they have a relationship built, and so they're going to come in and not have to worry about. It's not going to take 6 months to get that trust level built up. We're already going to be in that groove where we are trusted advisors to them. So if they come to me from you, I know that they already understand that we're trying to help them grow the business. We're trying to help them streamline the process. And so they're already going to be ready to jump into the process wholeheartedly and give themselves over to that process. And it's going to be the same in reverse if they come to Axis first. When they're ready and they've grown into needing a relationship with Axiom, they're going to be ready to listen to that advice and to understand where it's coming from. And so I think the symbiotic relationship that we have built up is going to be so beneficial to clients, and they're not even going to understand it. They're just going to know that I have trusted advisors who have taken my business and they've 10x'd it, they've 20x'd it, and it's going to be a beautiful thing to watch.
Well, that's your job. Make it happen. And the clients that are in the fold already, the reports coming back are just tremendous. And there's a piece, and that's the other thing I'll say. There's a piece. I think one of the things we haven't talked about is the benefit for a business owner of being able to not worry about this the most important side, maybe not. It's kind of a toss up between sales and financials, because, if the sales stop, that's anxiety inducing.
Right.
But if the sales are going, and a lot of times when the sales are just killing it, there can be, I've seen extraordinary anxiety about what's actually happening in the business, because sales can imperil the business as much as a decline in sales can imperil the business. So the financial clarity just leads to a financial peace, to rip off another Dave Ramsey term, that I think business owners ought to expect if they're going to outsource this relationship, whether it's with Axis or somebody else. If you're settling for something less, you shouldn't. It's your right as a business owner to be able to focus on growing your business, building it with purpose, and eliminating the anxiety that's going to keep you from doing that is something that we would love to talk to you about. So I'll say it again, not me. I don't want to talk to you about that. I want you to talk to JoAnna about that, because she's much better at it than I am.
No, if your current outsourced accounting or in-house person is only asking you task and transaction type questions, and they're not asking you questions like, how do you want me to help you set aside money for this? How do you want me to help you get us in a stronger cash position? Then really, they're not an outsourced accounting person for you. They're really just a data entry reactive bookkeeper. And in order to grow your business, you have to have somebody who's going to ask you those questions and not just worry about, hey, what is this transaction for and what is that transaction for? There is some of that in this, obviously, but what we're moving towards is asking you the questions you didn't even know needed to be asked, the questions that you didn't even know needed to be answered.
Awesome. Well, this has been another episode of the Grow with Purpose podcast. JoAnna, you killed it. I love our conversations. I learn a lot. There's so much about the field, even though I've been involved in it for 30 years. You're teaching me a lot. So thank you for being excellent at what you do. There's going to be a leadership guide, as there are with almost all of our podcasts, have a leadership guide that's going to break down everything we've covered in maybe 2 or 3 pages. And you can get that in the show notes for this podcast. You can also go to our website and subscribe to have that leadership guide delivered to you every time we release an episode. And I encourage you to do that, because it's going to remind you there's an episode out there, a new one that's just dropped, and I'd love to go listen to it. But I can kind of get the high-level notes or come back to it after the podcast, get all the links, all the resources, anything we've talked about. In the leadership guide to this episode, there's going to be more information about Axis. There's also going to be a booking link where, if you're interested in exploring what this might look like to outsource your accounting department to Axis, you can book directly on JoAnna's calendar. You've seen her. If you're watching this, you've seen her. You've definitely heard her. So it should be a little bit easier than walking into a cold conversation. I will say it again, the depth of insight, but also just the accounting emotional intelligence that she has in working with business owners. I think that's going to be an easy conversation for you to have. So I'd encourage you to take advantage of that. Rate us if you like it. I guess I say, if you like it, rate us. If you don't, maybe don't rate us. But it's the way that people hear about us and we get this message out. Axiom and Axis really believe that small business done well can change the world around it. That is our why. That's why we exist. So our ability to do that with a wider range of people, a greater audience, is very important. We want more people to benefit from this content. So if you can help us with that, please do. Until next time, thank you, JoAnna. Great conversation. Go back and listen to the 2 previous episodes if you missed them, and we will see you next week.
Thanks for having me.